Floki Inu, one of the major meme coins in terms of market cap, has also dropped quite significantly in the last few months. The question is, does it make sense now to buy low in order to then, of course, later on sell high? Let's have a look at some relative valuation charts. Let's have a look at on-chain metrics. Let's try to get an edge over the market versus all the other market participants. We want to buy when nobody talks about an asset, and now Floki Inu is pretty much invisible to most people. Have a look at this chart. Floki Inu lost 72% in the last year, and historically it seems like we might have seen some kind of a floor. Now check this out. This is Floki Inu relative to Ethereum, so not the US dollar chart. It seems like over the years Floki Inu outperforms Ethereum, and it's rather on the lower end of that trading range. A rally like this in magnitude is roughly plus 500 to 600%. Have a look at this. This is Floki Inu relative to Bitcoin. Isn't it interesting how those bottoms all align on this single curved line? And we are pretty low here as well. And a potential rally versus Bitcoin could bring us up maybe 300%, potentially 500%. So that's the thesis, right? We want to buy a meme coin when everybody is shaken out, when the market has dropped a lot, and when nobody wants to buy the asset anymore. It seems like Floki Inu is at that point now. But of course, the overall crypto market hasn't done so well recently, right? This is the performance of the top 100 in the last month. Here's the performance of the top 100 in the last year. And yes, there are a few outliers here and there, but most altcoins had double-digit losses, including Floki Inu, which is over here. Now the token is mainly traded on two blockchains. We've got the Binance Smart Chain. Over there, we only had 161 traders in the last 24 hours. And then we've got Ethereum. Here we even had just 41 traders in the last 24 hours. And some of those are, of course, also bots. And that relates to 95,000 holders on the Ethereum chain and 450,000 holders on the Binance Smart Chain. So pretty much nobody is currently moving the Floki Inu. Now here's what's fascinating. It seems like over time, both the retail investor, but also the whale investor is moving their Floki Inu from on-chain holdings to off-chain holdings, to centralized exchanges. On the left side, we see the number of Floki Inu tokens that equals at current prices $1,000. Now those are all charts for the Ethereum chain. In the middle, we've got a 10x in minimum holding. So that's now $10,000 worth of the token at current prices. On the right, another 10x, so that's $100,000. On chain, we really don't see that much more accumulation since the beginning of 2024. So for more than 12 months. Now here we've got the same kind of charts for the Binance Smart Chain. A very similar behavior, just the number of holders tends to be a bit smaller. Overall, there are way more holders on the Binance Smart Chain compared to Ethereum. But once we add these minimum holding thresholds, the difference isn't really that high. Or even for the whales with $100,000 worth of the token, there's even less on the Binance Smart Chain than there is on Ethereum. What appears to be happening is that now the trading is moving to the centralized exchanges, to the market makers, and those market makers in the end are likely going to induce some volatility at some point, because market makers make money with volatility. The more the price is going up and down, the more leverage will enter the market, and that leverage also induces forced liquidations. That's liquidation fees. The trading fees themselves make money for the market makers and for the centralized exchanges. So that's what we have to look at. Currently, nobody looks at Floki Inu, but at some point there might be a rally again. Because have a look at this. This is the trading volume on chain. And Binance is now leading the pack. 20% of spot trading happens on Binance. And here we've got the perpetual futures market. Also, that's dominated by Binance. It's not high right now. There's only 28 million worth of trading volume of Floki Inu. Nobody looks at Floki Inu right now. But those market makers, those centralized exchanges have interest in more volatility, especially for a meme coin with $600 of market cap and quite a bit of history. Now, the issue, of course, is that the overall market is currently going down, right? It seems like Bitcoin is trickling down and also taking the altcoins with it. And because of that, US dollar valuations are likely going to stay depressed. I personally rather bet now on falling prices than on rising prices. But when betting on falling prices, it might make sense to rather take other assets, not necessarily Floki Inu, especially when we compare Floki Inu to its competitors. Have a look at this. This is Floki Inu relative to Dogecoin. And what you see at the bottom is the relative strength index. So it seems like sometimes Floki Inu relative to Doge is cheap. Sometimes Floki Inu relative to Doge is expensive. And the relative strength index, so this is the weekly chart, it tends to reflect those ups and downs quite well. And we are historically at a very, very low level. And these moves, they do matter. So this rally over here is a Floki Inu outperformance versus Doge of 600%. And this down move over here is a drop of 60%. And then again, this rally here is 500%. And since June of 2024, Floki Inu underperformed Dogecoin by 80%. So if we're now betting on falling prices, we probably should not pick Floki Inu. Probably makes more sense to still bet on Dogecoin. I actually made quite a bit of money shorting Dogecoin. Clearly, the overall situation in crypto has changed recently, and there seems to be one event that started it all off. What we've got over here is the Bitcoin price, and this red circle marks when Donald Trump launched his meme coin. So that's this over here. Most people got burnt with that meme coin. If you bought this in the first few hours after launch, you made money. If you didn't, you lost money. Since the launch, Bitcoin lost 21% of its value. Of course, the Trump token lost much more. A lot of other altcoins also lost more. And so the majority of people lose, of course, when the market looks like this. There's pretty much nobody that has their entire crypto portfolio in Maker or in Bearer or in Bitcoin Cash. Even if you hold those tokens, you probably have a diversified portfolio and you're down with all of those other tokens. Now here's something that's not so obvious. We see Bitcoin over here. Bitcoin went up by 14% in the last year. And this is now the top 100 ordered by their performance in the last year. And there are a few altcoins that did better than Bitcoin. Two of them being gold derivatives, so PAXG and Tether Gold. But there's also others that performed slightly better. But the vast majority of altcoins actually performed much, much worse. If you picked a random altcoin in the top 100 1 year ago, you've got roughly an 80% chance that you underperformed simply Bitcoin. And that's of course a problem, right? Because altcoins have more risk, and so in theory, they should also perform better, especially during times when Bitcoin tends to go up. And so I don't try to find the needle in the haystack. I don't try to pick the bearer coin in order to then make money. I do the exact opposite. I bet on the vast majority of altcoins doing worse than Bitcoin. And most of the time, that strategy makes money. Have a look at this, for example. This is Matic relative to Bitcoin, a very constant underperformance. Or this is Balancer relative to Bitcoin. Again, a very constant underperformance. And we can make money from that relative valuation. We don't have to bet on Balancer or on Matic going down versus the US dollar. We can bet on it doing worse than Bitcoin and make money when this thing continues to go down. Or we can also mirror that chart, right? We can just bet on this continue to go up. This is now Bitcoin relative to Matic. That's the logarithmic chart. This is the linear chart. So why does this happen? The reason is tokenomics, right? It's the altcoins that print more and more tokens, and that token allocation goes to the insiders, it goes to the developers. And for meme coins, we don't necessarily have an expanding supply, but for meme coins, we tend to have a lot of ownership by the insiders as well that simply sell off over time. And that's why Bitcoin performs so well versus all of those altcoins. And that's why I believe those are the kinds of charts we want to bet on. Yes, we can of course try to time Bitcoin itself, and we can try to buy this at 16K and then sell it at 100K. And this is a possible way to make money. I'm also trying to time Bitcoin. But why would we try to pick the few altcoins that perform still okay? Why not just flip this thing around and make money when those bubbles are red? So for example, over here on the 6th of December, I have made a premium update video how I have sold some of my Bitcoin because a liquidity crunch was incoming. So that was over here. I've made another announcement on the 25th of February how I've sold all of my speculative Bitcoin and how I'm selling all of my altcoin positions. And that was over here. I opened a position betting on falling prices of Chainlink on the 23rd of January. I opened a short position on Dogecoin and on PancakeSwap on the 14th of February. And the reason why I'm sharing this is because I've now closed the Chainlink position, so it lost 42% in the span of a few weeks. I've also closed the Cake short, which went down versus BNB by 27%. And I've also closed the Dogecoin short, also in profit. So really, when you know what you're doing, if you know how to do the proper risk management, that you don't get liquidated, and when you have the odds in your favor during times like this, when most altcoins underperform Bitcoin, then it is rather straightforward to make money like this. We don't have to find the needle in the haystack. We don't have to make 100x returns with a random meme coin. We can simply just let our capital compound by making 20% here and 40% over here. Most people are scared of betting on falling prices, but that's why I've made dedicated tutorial videos on the topic, how to do the proper risk management, how to set up those positions also in DeFi and Web3, not just with centralized exchanges, how to do this cost efficiently, and also how to select the right assets to short. There's more than 100 tutorial videos in total in premium. The link is down below. It's thebitcoinstrategy.com. Of course, I'm also sharing in detail how I currently see the market. There's a premium update video every 3 to 4 days. And I challenge you to look at other influencers, what they said during those times, right? Have a look at the date, have a look at the title of those different premium update videos, and let me know who said already on February 18th that it might make sense to bet on falling prices, or that crypto stopped expanding in the last 2 to 3 weeks, or how your influencer is selling aggressively. I don't really see many other influencers saying it like it is. Most YouTube channels just sell hopium. Most YouTube channels just want to push up their own bags, but they're not really looking realistically at the prices. They're not really looking at how much are people actually already in profit and when will that profit be taken. So if you appreciate during times like this that I keep it real, then of course feel free to give this video a like. Feel free to also subscribe. I publish videos regularly. And of course, feel free to also check out premium. The link is down below. Looking very much forward to seeing you there as well. Cheers.